Hello everyone and welcome to Elliott Wave Cafe. I want to wish everybody a happy new year and let's hope that this year will be a lot better. It seems to get off to an interesting start on here. I mean, especially on the markets. We can take a quick look up here at Bitcoin and it's about 31,500. I know, the purpose of this video is to talk about macro, but I can't take my eyes off this thing as it's getting near 31,500. And in just a simple, technical pattern in here, right, we kind of sold off here in three waves. You can see how we advanced. We broke this clean trend line. We just came back and kissed it. We retouched it. And this is a clean third wave advanced price action. We'll see where this is going to go. If you guys want to watch more about this, just kind of look at my last week videos where I talk about this. And then I also have some longer term charts. Just kind of check my channel. You'll see coming to the pro room or into the regular public channel where we discuss Bitcoin in more details. But it's really interesting to see as it continues to push higher. People are excited. It's a clean, clear third wave price action, and I don't think this before we should correct. I have my eyes on 42,000 at this moment. All right, let's take a look at our regular approach here for Elliott Wave Macro Cafe. This is the second episode, so welcome and thank you for being a part of this. Let's take a look at oil, and as I've been saying last week, we are monitoring this for a continuous advance here, maybe towards the $70 mark. And if I kind of start on a 2-week chart in here, we are nicely contained in this channel with an obvious flush that happened back in March when everything got locked down. The oil went below zero. Since then, we kind of nicely recover. We are right now at about 46, 47 area. But I think this thing, it's got a chance to kind of get back towards the top of this channel. And, it might take a year or two, but maybe even faster than that. But I think, oil, it's prone to gain here, especially with the reopening of the economy. So in terms of Elliott wave structure, we're looking at this as either being an A, B, and then up in C, or the beginning of an uptrend that can take oil above 100 in the future. So kind of coming back from a 2-week, let's say, to a 3-day chart. From these lows, I'm counting this as a wave A or as a wave 1. And I'm counting this decline as a wave B or as a wave 2. Remember, every time you got an impulse, you can obviously count it both ways depending on your higher time frame count. If it's just going to be a simple ABC, we're still kind of going to try to get back up here towards the top of this channel for the C wave, and then that will be followed by the next decline, which will take, whatever shape you want to, obviously. If it's going to be the beginning of a larger advance, and that's a 1, that's a 2, that means we're just kind of starting the advance here in this larger third wave. I'm going to clean this up, but if that's the case, kind of going back even to a 1-day chart, I could look at this as being wave 1 of the C or wave 1 of the larger third wave advance. So if we're moving in this wave C, I'm looking at this as a 1, 2, 3, a small fourth in here as a fifth, followed by a decline here, and that would be wave 2, right, of either C or of a larger wave 1 that's in progress. So you would go 1, 2, 3, 4, and 5, and that would either become, again, wave C or the beginning of the larger subdivisions there. So you go 1, 2, this will be your third, you'll go another 1, 2, and then followed by 3 and so forth. But both counts kind of continue to pull this channel. So that's what I'm targeting. I think, even after we're pushing maybe to one more high here in oil, there might be a chance, maybe if it's a nice 3-wave decline, to kind of get into this market and go to the upside. So that is on oil. Next one on my list, it's gold. And gold is, it continues to act nice in here. We are long on this into our pro room. We started longs back into this level, and the purpose of this was, and let me just kind of go to this is the MA count, but let me go to my regular counts on here. So if I kind of start from these highs on here, we're looking at this whole thing as being a wave W, and then you have this X wave followed by this, and then this. Considering this correction complete, we are positioned for a move to new highs in gold. And that starts from the lows with the wave 1. We push back here in this wave 2. I've had this as an alternate wave for a while, which I'm probably going to have to cancel right now unless I move the C wave higher, but I don't think that's the case. That would have been an A, B, and then up in C for another X wave, and then you would have to correct lower. But gold market to push up to the upside. So I'm looking at this as a 1, 2, another 1, 2 in here, and now we kind of have to get on our horse and continue to break higher. If this doesn't happen, there might be a different count in here. Possibly the C waves moves to the side in here, and I would have to look at this as maybe an ending diagonal that's still in progress, although I don't think that moves up here. It's kind of clearly impulsive, but I would have to come up with a different interpretation in case we're starting to fail up into these levels. But overall, I think this larger corrective pattern that you can, let me just kind of go back to our larger time frames in here, and this is, the longer one, but I can kind of dig this down to more of a something manageable in here, let's say to a 2-week, right? I'm looking at this as just being just a small blip into the overall uptrend. I'm just looking at this thing as being correct. So it's a 1-2, and then you're kind of pushing this to the upside. Yes, so this is, the overall trend in gold remains up, and, we're just kind of trying to see how far we can go before this third wave is possibly over. Even if this third wave is finished up into the fourth, we still got to push back up higher here in this fifth. Will be a third wave intermediate followed by a fourth, and then we push higher. Again, just kind of going back to looking at a simple 2-week bullish chart, you can see our cycle here, wave 1, wave 2, 1, 2, in the middle of this larger lead 1, then another 2, and then we continue to push higher. So I remain bullish on gold. I do. I think the markets in here are definitely telling us what they think about what's happening with the monetary policy, and you can see also what's going on in Bitcoin as well. Now, the only risk maybe to this trade would be the fact that the yields are going to start to move up higher, and we're going to have real yields that are going to start to get positive, and gold usually suffers under that environment, but remains to be seen. For right now, I'm going to continue to look at the patterns that are being bullish and try to position myself as much as possible of this. So with that being said, let's go and take a look at yields in here as Bitcoin makes new highs at 31.6 right now. But let's take a look at the 10-year yields. So we've talked about this previously where, we looked at the 10-year yields kind of declining for a long time. And we've hit lows up here at about 34 to 35 to 36 basis points back in March. And since then, we've recovered. We're very, very close to a 1% mark. And I think this is a very big psychological level that the market or the Fed tries to control here, as we're not able to pass this 1%. But I think once this gets taken out, there'll be a big psychological break, and there is a chance that yields are going to continue to push up higher. Obviously, there is inflation talks and all that with the reopening, and this has to be reflected into the yields as well. And as long as they don't respond, the bond market will continue to tell you that, possibly the recovery will be weak, or we will be just kind of, sluggish. And if the yields manage to come back to 75, or maybe back towards the bottom of this line, you'll hear a lot more of that as that, the bond market is telling you that the economy needs. But if we're starting to break above this 1% mark in here, depth of this channel. Now, we're still in a pretty bearish environment here on yields until we start to break this 144, 145. I think this is if we break above here, we have a much bigger chance to continue to the upside on yields, because remember, this could still be considered as a 1-2, and then this whole thing here is a third, and then you have this still as a fourth wave followed by another fifth. We'll see if that's what happened. It would take something quite shocking to the system for this again, and that would be obviously reflected into the equity markets and the S&P 500, as the market will start to sell off. But I remain I listen to the market, and I'm watching this 1% mark, but I think the forces here are trying to push these yields over the 1%. Remember, Fed is in control of all this, especially towards the shorter term of the yield, because the 10-year yield. But if they're going to start to come up with any sort of yield curve control, and they're going to buy all the bonds that people are selling out there, then this thing is not going to go much higher. So it's very important. All right, the next one on my list is the S&P 500. So let's just kind of go back and just find it. So I continue to remain bullish on the market, and I've showed you can check the video from last week, but I've showed you several on here. Either way, we will get some kind of a retracement, but I think we're still early in that process. I think we got to get more bullish before we are somewhere up here into between 38 and at about 4K. into the S&P. I'm considering this as an alternate wave 2 in case we can get 1, 2, and it's kind of similarly with what Bitcoin does to push. And if this is a fifth wave, it's still got a little while to go. I don't think we're near in overbought territory. The market is just kind of slowly moving up. We're getting, and with all the support on both sides, monetary and fiscal, it's hard to argue right now for a big sell-off. There's got to be something else they're going to knock this off its rails, and we don't know what that event will become. But for right now, I can. The month of January, it's maybe towards the half of the month. For right now, I remain bullish on this. So let me just kind of see if I can. So this is the longer view as a fourth, and we're looking for a fifth, and that's the other one that just looks for this between. I mean, it's pretty much the same. It's just a little bit cleaner, right? Looking toward 3,800 in terms of fib multiple of this wave 5 versus 1 through 3, and then 5v1, this fifth wave, will equal this wave 1. So overall, bullish. All right, the last one that I have here is the dollar index. So let me just kind of go and take a look at it. And it's been making new lows, but it's been, just kind of slowly pulling back off Saturday. But you can see how the trend is clearly down. And, what we're doing here is I'm targeting still the bottom of this channel. So I'm looking at an equality between this decline back in here, and this would reach equality back here right below 88 for the dollar index going. Now we did have a small reaction last week, but it's a chart that doesn't mean absolutely nothing. There's nothing in here to tell us the RSI continues lows. It's kind of getting into the oversold territory, but nothing's. If you look at the RSI back on the sell-off, well, maybe similar levels. So we did get a little bit of a bounce in there before we sold off, do this, and then sell off again. But I continue to remain bearish on the dollar until we're going to hit the bottom of this channel, and then we'll see what type of a reaction we will get. So going back to a one-day chart, you can see kind of my count on here. Let's start from the top to a 1, 2, 1, 2, 3, third. I'm matching this fourth wave with the second, and we're in the middle of, we're towards the end of the 1, 2, 3, 4, 5. So maybe that's a third, 4, and then either this fifth wave is over or it's still in progress as we new lows before we kind of bounce. We are getting a little bit of it's starting to kind of falter on here as we're making new lows. So there is a chance here, or there is an increasing chance that we will get a bounce into the dollar, and that might be this month or maybe early next month, working our way through this move. I would look for an initial bounce, maybe go on a smaller time frames, look for a 5-wave advance into and then kind of buy the pullback if you want to take advantage of a rise back up here towards 92, 90, maybe even as high as 94. Maybe targeting buying begins. So that's kind of what I'm seeing. All right, now I'm going to show you a few little things in here about some of the correlations between some of these markets that I've talked. And just by looking at Bitcoin right now, you can see how we're getting here 31,800, 31,750, and you can see the RSI here has pretty high levels. These RSI levels were back 2017, so pretty extreme in here. But what you can see is that we are not that extreme on the RSI. So my red candles in here, they kind of show an RSI over 84, and then when the RSI will get over 89 into the 90 territories, those candles will turn blue, and those are kind of extreme levels. And you see kind of what happened back into the blue back here in 2017 in June. We've had one more push up higher, and then you're going to get a correction. So markets are getting quite extended in here, and it's something interesting to watch. We can actually blow off much higher than that. I mean, you can see right how the red candle back, how it looked, and then you still got a move from 10,000 all the way to 20 after that red candle. So I wouldn't be surprised if Bitcoin will push even to 40,000 to 42,000, as a blow-off top before it starts to correct. And the higher we get, those corrections in terms of the percentages, they'll not look that crazy anymore. So just a kind of quick look at that. But anyway, kind of going back to my look on here, what I have here is I have a relative rotation graph of some of the stuff that I talk about. So that's the dollar index, and that's the gold, and then that you have the oil, and then you have the S&P 500. And right in the middle in here, my comparison index throughout all of this, right here in the center, it's Bitcoin. All right, so what I'm doing here through this rotation graph, I'm comparing all this asset class. You can see how, this is the lagging quadrant that's on here. This is the weakening quadrant. This is the leading, and that's the improving quadrant. So you can see how, everything out there, it's obviously under. You can kind of go back, and let's say back in August of 20, how of this move around in time as I'm kind of sliding my up there, and how, how they did compared to Bitcoin. Right? So what I'm going to do now is I'm going to change the Bitcoin as being our guide here to, let's change it to the SPX. So if you wanted to beat the S&P 500, then you look at some of these other asset classes. Although I don't have Bitcoin here, let me just you can see where Bitcoin is, right, compared with the S&P 500, and you can see kind of where some of these other asset classes are. So oil, it's starting to get back here, and it's probably going to get over into this leading quadrant. So I'm very interested in oil. Oil looks pretty good. Gold, it's kind of lagging because we're having that correction, and the dollar index kind of similar leads. This is a 1 week relative. You can see where we were before, so you can see how Bitcoin actually was lagging, right? Was weakening back, and this is back in the middle of October of this year. But then as it's starting to gain strength, all the way up there as oil was, lagging in here, and now it's kind of turning back up. So it's a kind of very interesting software in here. I love it. I'll recommend it to you guys. I'm going to have some links for it possibly next, but it's something that we're watching. And then let me just and then this is the dollar index, and then let me change the comparison with the dollar index and see where that takes us. So how all these are performing against. You can see how oil is obviously outperforming the dollar index. The S&P 500 is outperforming. Bitcoin, we're not even talking about that because that is like all the way up there, right? And then gold is kind of starting to turn a little bit, and it's probably going to, try to push to some of these quadrants, either maybe towards the middle. But as soon as I see this arrow kind of turning up in here, we're gonna get much stronger into gold versus. So thank you guys so much for watching, and I invite you into our pro room where we do this every single day. I also invite you to our public room, and don't forget to subscribe to the channel and hit the thumbs up. I need to go, and I'll see you in a couple of weeks for Macro Cafe, and then next week I'll see you for Bitcoin and Ethereum, as things are getting definitely very, very interesting. Again, thanks for subscribing and holding through. Share this video so more people can see it and find us. Again, I appreciate you. Happy New Year again, and I'll talk to you all